in terms of the initial optimism on Market Street that greeted the prospect of vaccines for the coronavirus pandemic now seems to be evaporating, even as the rollout of the first virus vaccine by Pfizer is taking place. So let's get a sense of the global marketplace direction as we bring in Uchenna Minnis, the founder and managing partner at WST Markets. Good evening, Uchenna. It's good to see you. Thanks for coming through. And so I read this novel many years ago as a young guy. The title was Dreams Die First. So I'll try to forget it. But I think it was Jeffrey Asher. But I'm going to try and get that. But I could never forget a title, Dreams Die First. So it doesn't look like hopes and optimism on Market Street seem to have evaporated over the fact that we have a vaccine for the virus pandemic now that the virus is resurging.
Yeah, I think where we are right now, Boason, is more like a shift as in terms of the equilibrium, if you would say, between the efficacy of the vaccine. And when I mean efficacy, I mean how well would this vaccine be evenly distributed that can affect tangible herd community across economies, really, or the populace, and compared to the current resurgence of the viral infection. And again, if you look at a number of administrators in some cities, they are trying to control the possible risks that might come with the festivities and with the holidaying, if you would say, during this period. And they're trying to say there is that possibility that they might not have such, should I say, leeway for residents and the populace to really go above their normal facilities as we do. So the issue with the vaccine is there, but however, it is not an immediate solution, really. What we've seen with the market pricing, that is just the idea of the event, really. And the reality is that before the vaccine will start kicking in terms of its efficacy and even distribution amongst people, that should be looking at second quarter, second half of next year. And I think that's where it is really. Markets are trying to see, or market participants are trying to see what exactly can be defined as whether the leading indicator, as it were, or the lagging indicator between the vaccine and also resurgence of the coronavirus.
Yeah, I got the Dreams Die First a novel by Harold Robbins. You know, my producer seemed to have a better hand of all this with technology. Just Google it up, and that's it was first published in 1977. I guess I read it in the early 80s also. But it's a nice one. I recommend it to read if you just want to get some of these all these weighty issues off your mind. Just pick up a novel and read these days. It'll be good. But from all indications, it looks like 2020 has been a good year. You will agree with me, Uchenna, for risky assets such as equities, isn't it?
In a very weird and unusual way, also, it has been, you know, and that is where analysts and microeconomists have started to point out that this is basically regarded to as a tail-leg recovery. Tail-leg recovery in this regard, whereby you are having risky assets, you are having this market that is really just secluded for the top 1%, basically, in the economy, compared to the general actual mainstream economy having been hit by this violent pandemic, really. So that's basically where we are. The reality on ground is different with the reality in the financial market on risky assets, and that's why it's referred to as a tail-leg recovery, whereby they are just diverging from the point, really, also.
So speak to us from the emerging markets perspective, which, yes, oftentimes we talk about the Dow Jones, the S&P, and Russell 2000 and all of that. But what about the emerging markets in 2020?
Well, the emerging market was really caught in between that hard place and the rock, really. And I can say it didn't get exactly really hit the way it should, because all through the year we saw a very significant bearish USD. And in the way, fortunately for emerging and frontier market, that has sort of cushioned the effect of its own, should I say, heat from the general point of what the pandemic has done for compared to other economies, really. So I think that's where we are. The emerging market, we're sort of just trading in, should I say, a bit better place compared to what should have really happened, or we've been the outcome if we had a bullish dollar for 2020. For 2021, I think it's looking quite positive and bullish toward the EM space, given the fact that a lot of assets right now are underowned and undervalued. And I think on the back of the successful distribution of this vaccine, and we get to, should I say, regularization of economic and business activities, what we'll get to see is that when we'll get to start to see inflow into the space as market participants and investors will try to search for yield in places where they think assets are actually undervalued.
So let's talk a little bit about the commodities market in particular for gold and all of that. I'm sure the fundamentals and all that are still out there. But one big story we're following up this week is the FOMC's final meeting for the year. Of course, what guidance are you looking for from Jerome Powell and the rest of his team at the FOMC?
I think I'm not expecting anything drastic at this point, and I think that's I expect more of the same, really, and recent from compared to recent FMC meeting. He's going to say that they're being cautious, they're monitoring every single risk. They are happy with the vaccine introduction. However, should in case there is any resurgence of risk from any point, they have had the capacity, as enough effective to continue to push out, So I think that is what Jerome Powell would look to do. Jerome Powell really listens to the market, really. So I'm sure he wouldn't want any sort of blockback like what we saw towards end of February into March this year. However, should we get any form of sort of tightening measure, which I doubt, that is a stretch, I can see the market react really aggressively negatively to that point. But I think he wouldn't want to toy that part really, because it might be really detrimental if you look at it, because a lot of the reactions we've really seen from market participants, risky assets, it has just been on the back of the fact that the federal would always step in at any point should it comes to that point, really. So I think that's where we are, and I think John Powell knows how to play the rhetorics and optics and the narrative, if we will say, to continue to keep stability in the market.
Okay, we thank you for your time this evening, Uchenna Minnis, founder and managing partner at WST Markets. Thank you so much and have a great evening.